What is going on? Welcome back to the MG YouTube channel. I'm your host, Malachi Greb, CEO of Elite Automation, Elite Properties, and investor in Tesla. Also, just an investor in other stocks. And that's what we're going to do today is we're going to go through some more of my investment thesis. There's another part 1 to this video, and we're probably going to do some other videos just to make sure these videos don't run on forever. But we've basically done my overview investment thesis and strategy. We've done virtual AI and real world AI. And to give you a quick rundown without watching the other video, basically my investment thesis is pretty much everything AI related, whether it's virtual AI or real world AI. If you want to know more about those particular two topics, you can go and check out that first video. And then I'm going to kind of just continue on with this video here. By the way, I'm talking to Grok, so a lot of this video is going to be me just talking to Grok, and I'm already 2 hours into talking to Grok and doing this. I actually did a lot of this before I even started recording the first video, but I just want to kind of take you guys through some of the questionings and things that I'm asking Grok and all the different things that I'm kind of putting into my different theses and whatnot. So I'm taking some of the things that Grok spits out to me, I'm copying it, I'm pasting it into Google Docs. I have Google Docs also opened on my computer, so I'm able to edit from both sides. I can copy and paste on my phone, and then I can edit here on my computer. So that's just kind of what my workflow is, so you can see how I'm actually using AI. And I'll actually touch base on some of the other things real quick. So for virtual AI, I have Google, Microsoft, and Grok as my top contenders. Google has Gemini and has the workspace, and Microsoft has Copilot and Office and Teams and all that good stuff. And so the two things I really like about those the thing that I like about those two companies a lot is just the fact that they already have an ecosystem of people working in that ecosystem every day. And 95% of companies are either using Google or Microsoft for their workflows. And so if you don't already know what Google Workspace is and what Teams is, then it'll be kind of hard for you to really understand how integrated those softwares are. With Gemini, I can ask it about things that are in my Drive folders. I can ask it things that are in my Google Docs and my spreadsheets. And it can just compile a bunch of information. So, I love ecosystems because not only can they learn, Gemini can learn from the ecosystem and me punching buttons and seeing what I'm asking it and looking at all my documents and stuff like that, but it can also execute across the ecosystem. So it can automatically generate docs. It can automatically, now it can't necessarily do that at this moment. I mean, it kind of does, but not to the degree where it's just completely functioning on its own. For our automation company, where we have a bunch of engineering documents, there's electrical prints, there's mechanical drawings, there's robot code, PLC code, all these things that that Gemini can have access to be able to look through all that data. And even in our business, it's already taken things that would normally take 1 or 2 days, or at least a few hours to do, and being able to crunch it down to 30 seconds. So instead of having to flip through electrical engineering prints to find some certain thing, you can literally just ask it hey, where's it at? Where, blah, blah, blah thing. And it's on this page, this line, and okay, cool, done. So that saves a ton of time. And then it can relate it to the the PLC, which I don't want to get too far into that. I'll get into the weeds quick. If you know me, I get into the weeds quick. But Microsoft Copilot has that same capability with its Teams workspace, and it has its virtual drives and everything like that as well. Then you have Grok Macro Hard, which is talking about doing the same thing. They're talking about being able to use AI. They're talking about being able to use AI to basically do everything that's on your computer. The big thing is I don't think that they have the ecosystem that Google and Microsoft have. However, they do have innovation, speed. They're I think between all three of these companies, Grok has the ability to execute faster than Google and Microsoft. The big downside is they don't have the current data and inputs that Google and Microsoft have. They're just constantly can be collecting data, whereas Grok doesn't really have any ability to collect data, at least in virtual AI. Now, I think in the real world space, I think that they do have actually some potential in the real world space for being able to um, be integrated with like the vehicle and being able to be integrated with like Optimus and creating some value from that side of things. Then for real world AI, I have Tesla for Robotaxi, Google for Waymo, Amazon for Zoox, and I have Symbotic here, but I'm not going to probably invest in Symbotic. It's just kind of there as a placeholder. They're basically a robotics company, which actually does something similar to what my automation company, Elite Automation, does. They just do a little bit more in the logistics side of things, whereas we do like more generalized manufacturing. We do some logistics stuff too, but it's more. And then you have some private companies like Figure AI is there, Boston Dynamics is there. But yeah, so this is a big thing I'm playing in this space. Again, everything is like AI related. So I'm gonna go ahead and dive into like the next thing, which is like GPUs and all that good stuff. I'm gonna just start talking to Grok, and you're gonna be here to witness. All right, let's go ahead and move on to the next topic.
Got it. Let's move on. We've now covered virtual AI, real world AI. What would you like to tackle next? We have these sectors still to go: GPU/AI chips, NVIDIA, AMD, etc., RAM, memory, energy, Bloom Energy, and others, AI infrastructure, data centers plus space, QPU, quantum computing. Which one do you want to go into next?
Let's go AI infrastructure, because I feel like AI infrastructure will kind of it's like the parent to all the other things like GPUs and all those other things.
Got it. That makes sense. AI infrastructure is indeed a broad parent category that covers a lot. Let's define it clearly before we start scoring companies. AI infrastructure generally includes physical data centers, the buildings and facilities, power systems and cooling inside those data centers, networking equipment, AI-specific hardware, GPUs, servers, memory, etc. Emerging, orbital, space-based data centers. Since you see this as the parent category, I want to get your thinking first. When you think of AI infrastructure, what are the main companies that immediately come to your mind? Or would you like me to list out the major public players in this space first, and then we can discuss?
I mean, I think I look at it as a lot as like the physical data center.
Got it. So you're mainly focused on the physical data centers themselves, the actual buildings, land, power capacity, and infrastructure required to house all the AI servers. This is a really important distinction. If your focus is on physical data centers, then the main public companies in this space are Equinix, EQIX, Digital Realty, DLR, Iron Mountain, IRM, especially their new data center push. The big hyperscalers themselves, Microsoft, Google, Amazon, who are building their own massive data centers. Some newer specialized names like Vantage Data Centers or CoreWeave, both still private. Here's my question for you. When you say AI infrastructure, do you want to focus only on the companies whose main business is building and owning data centers like Equinix and Digital Realty? Or are you also okay including the hyperscalers, Microsoft, Google, Amazon, who are the biggest builders and users of these AI data centers? Which direction do you want to go?
I think we need to do both, but we just need to do them as separate categories.
Got it. That's a smart way to organize it. Let's split this cleanly into two separate categories under your overall AI infrastructure pillar. 1. AI data center operators, REITs, companies whose main business is owning and operating data centers. Equinix, EQIX, Digital Realty, DLR, Iron Mountain, IRM. Others that might emerge, 2. Hyperscalers, AI data center builders, companies that are massively building their own data centers to support their AI workloads. Microsoft, Google, Alphabet, Amazon, Meta. Would you like to start by scoring the data center operators, Equinix, Digital Realty, etc., first? Or do you want to start with the hyperscalers as AI data center builders? Which one do you want to tackle first?
Let's target the ones that are actually building the data centers right now.
Got it. You want to focus on the companies that are actually building the AI data centers right now, the hyperscalers. Let's start there. These are the main companies aggressively building AI data centers: Microsoft, Google, Alphabet, Amazon, Meta. Would you like me to throw out a scoring framework for this category, similar to what we did for virtual AI and real-world AI? Or do you first want to discuss which of these four you think are the strongest in AI data center building before we start scoring?
No, I meant the other ones.
Got it. Thanks for clarifying. You want to focus on the data center operators and REITs, the companies whose main business is actually owning and operating the physical data centers, not the hyperscalers. Here are the main public companies in that space: Equinix, EQIX, the largest and highest quality data center REIT; Digital Realty, DLR, very large player, strong in AI related demand; Iron Mountain, IRM, has been making a big push into data centers recently. Would you like me to suggest a scoring framework for these three companies, or do you want to add any other names before we begin?
Let's go ahead and start scoring.
Got it. Let's start scoring the AI data center operators. Here's the scoring framework I'm suggesting for this category. AI data center operators scoring out of 50. 1. Current AI data center exposure. How much of their business is already tied to AI hyperscaler demand? 2. Portfolio scale and quality. Size and quality of their data center portfolio. 3. Power capacity. How much power they control and their ability to secure more power. 4. Growth pipeline. How much new capacity they have under development. 5. AI demand positioning. How well positioned they are to benefit from the AI boom specifically. Would you like me to go ahead and give initial scores for Equinix, Digital Realty, and Iron Mountain using these 5 categories?
I think we also need to be including another one for like the financial side of things.
Got it. You want to add a financial component. Here's an updated scoring framework that includes the financial side. AI data center operators scoring out of 50. 1. Current AI data center exposure. How tied they are to AI hyperscaler demand. 2. Portfolio scale and quality. Size and quality of their data centers. 3. Power capacity.
Okay.
Ability to secure.
Before we go on to scoring these, I need you to give me a breakdown of each one of these companies.
Here's a clean, straightforward breakdown of each company. Equinix, EQIX, the largest and highest quality data center REIT in the world. They own premium data centers in key markets globally. They're considered the blue chip name in this sector. Very high quality assets, strong reputation, and great relationships with hyperscalers. However, they're also the most expensive. Digital Realty, DLR, the second largest data center owner. They have a massive global portfolio. They've been more aggressive than Equinix in pursuing AI-related deals. Slightly lower quality assets than Equinix, but generally cheaper and more focused on growth. Iron Mountain, IRM. This one is different. Iron Mountain started as a record storage company and has been aggressively pivoting into data centers. They've been buying up a lot of land and power capacity specifically for AI data centers. They're the most newcomer of the three and have the highest growth potential, but they also carry more risk. Would you like me to go deeper on any specific one of these three, or are you ready to start scoring them now?
Yeah, I would like to know like what their market caps are.
Here's the latest market caps. As of late April 2026, Equinix, EQIX, roughly $1,107 billion. Digital Realty, DLR, roughly $68 billion. Iron Mountain, IRM, roughly $34 billion. So in terms of size, Equinix is the biggest by a decent margin. Digital Realty is in the middle. Iron Mountain is the smallest of the three. Would you like me to also give you a quick comparison on how much they're actually growing, or any other key metrics? Or are you ready to move on to scoring them now?
I don't know why I forgot to plug these in. I'm gonna go back through all these different ones and put like the market caps and all that stuff because like the financials are a very important thing of this. Like, this first initial part of this analysis, which a lot of us already know, but I just want to start building out a framework for myself where I have all these things documented and I can keep adding data over time. That way I have a framework where I can start building on it, right? But I don't have this like framework of I don't have this framework of all this in place yet. So it's just something that's needed for me to start building this out more and understanding some more about these companies and whatnot. Because like again, like these three here, I actually know pretty much nothing about. Like this is not really a sector that I was really going to dive too deeply in, but it's something I want to be at least privy of and understand like what's going on in this space, and maybe just put like a small amount of money in this. Again, I might put one share in each one of them just to, or I might just buy one share of each one of them just to have a little bit of exposure to it, so I can kind of watch it over time, and also I'll just kind of like do research on these individual ones as I have time to do research. Yeah, let's go ahead and do the comparison.
Here's a clean, side-by-side comparison of the three. AI data center operators. Quick comparison. Quick takeaways. Equinix is the highest quality, safest, but also the most expensive. Digital Realty is kind of in the middle. Good balance of growth and quality. Iron Mountain is the most aggressive and highest risk, highest reward. They're making the biggest bets on AI data center growth. Does this help? Want me to explain any of these points in more detail, or are you ready to start scoring them?
Can you share this last year's growth?
Here's a clear breakdown of their growth over the past year, mostly 2025 performance. Iron Mountain IRM, the fastest growing of the three. Their data center revenue grew roughly 39% in Q4 2025 compared to the year before. Overall company revenue grew about 12 to 13% for the full year. Their data center business is growing the quickest. Digital Realty DLR, solid mid-single digit growth. Revenue grew around 10% in Q3, Q4 2025 compared to the previous year. They had very strong leasing activity, especially with hyperscalers. Equinix EQIX, the slowest growth among the three. Revenue grew about 5 to 6% in 2025. While they had strong AI-related bookings, their overall revenue growth has been more modest compared to the other two. Quick summary. Iron Mountain is winning on pure growth speed right now, especially in data centers. Digital Realty is in the middle, and Equinix is growing the slowest, but is still considered the highest quality. You want me to compare any other metrics like bookings, power capacity, or profitability next?
Yeah, so like this is the reason why I don't necessarily care for these type of companies, because a lot of times they just end up being high growers. So like the total company growth was like 12% on Iron Mountain, which was the highest growth one, highest growth. And that's 12% is not even good. I mean, now I do like the fact that the revenue growth was, or the data center growth was 39%. Maybe they're pivoting from just being like traditional like real estate or something, and they're pivoting to data centers, and so like that might be like a huge growth vector for their company where they can start hitting an actual 39% total company margins if they're going from holding all this real estate that's growing really slow and they shift over to primarily doing data centers. That could have a significant impact in their future growth. So they could be having, if I look at this with the 12% revenue growth, I would assume they were actually growing revenue at like 5-6%. And then they started getting this huge growth from the data centers, probably from a pivot in their business. And this 12% might start turning into 20%, might start turning into 30%. It might hit that same 39% growth. I mean, we might see data center growth go from 39% to 70% in the next upcoming years. And then in turn, you'll see the total revenue growth, maybe go to 20, 30, 40%. Now, I don't like, even a 20% growth necessarily. That's like the minimum I would like to see. I'd really like to see, almost like a doubling, so if us go, like at 12%, like next year, we should see like 24% total growth. And like the next year, like at least like another 30% total growth. And ultimately, I'd like to see them in the 40% growth range for me to like really put any decent amount of money into them. I don't necessarily need to see that. I just need to project that they're going to have that much revenue growth. Let's dive a little bit deeper into Iron Mountain.
Here's a deeper dive into Iron Mountain, IRM. Iron Mountain is a very interesting and unique story in the data center space. What they actually do. While most people know them for storing old paper records, they've been aggressively transforming themselves into a major data center player. They realized they had a huge advantage. They already own a massive amount of land and buildings with existing power connections across the country. Instead of building new data centers from scratch, which takes years, they're converting many of their existing facilities into high-power AI data centers. This gives them a major speed advantage. Key strengths: extremely aggressive in securing power and land for AI. They've been one of the fastest movers. Much cheaper valuation compared to Equinix and Digital Realty. Their data center segment is growing very rapidly, nearly 40% in recent quarters. They have a massive backlog of deals with hyperscalers. Key risks: their core record storage business is slowly declining. Their data center assets are generally lower quality than Equinix's, much higher debt levels than the other two. They're still relatively new to the high-end AI data center game. Bottom line, Iron Mountain is basically the high-risk, high-reward bet in this sector. They're making the biggest bets on AI data center growth, but they're not as polished or high quality as Equinix. Would you like me to compare their power capacity or backlog next? Or do you have specific questions about Iron Mountain?
By the way, one thing I like to do with the AI models is like I like to have it give me more information on the company, and it'd be smart for me to go through and have it give more information of each one of these companies, so that way whenever it does its scoring, it does it off of some of this more deeper research that it's doing into this company versus just kind of like giving some AI slop of just like giving me random numbers that doesn't have any context to it. I feel like if you make it do more digging and research, then it has more context for doing things like coming up with the scoring system and whatnot. Yeah, I would just kind of like to dive more into like their data center growth and if they've given any projections in their data center growth.
Here's what we know about Iron Mountain's data center growth. Iron Mountain's data center business has been growing very rapidly. In Q4 2025, their data center revenue grew 39% year over year. For the full year 2025, data center revenue was roughly $800 million. They expect data center revenue to exceed $1 billion in 2026. That's over 25% growth for the year, backed by their current backlog of signed leases. They're also very aggressive on new capacity. They signed 43 megawatts of new leases in Q4 2025 alone, and they're guiding to sign over 100 megawatts of new leases in 2026. They have about 400 megawatts of capacity that they plan to energize, turn on, over the next 18 to 24 months. Bottom line, their data center segment is the fastest growing part of their business by far, and management is very confident in continued strong growth through 2026. Want me to compare this growth rate to Equinix and Digital Realty so you can see how they stack up?
No, I'm just really kind of trying to identify if there's going to be an explosion in the stock price due to them shifting to data centers.
Here's a direct, honest answer. Iron Mountain has already had a very strong run because of its data center shift. The stock is up roughly 35 to 40% year to date in 2026, and it's up over 30% over the past 12 months. A lot of the positive move has already happened as the market recognized their data center growth. The situation right now: their data center business is growing very fast. They expect it to exceed $1 billion in revenue in 2026, over 25% growth. They have strong momentum with 400 plus megawatts of capacity coming online and a healthy backlog. The stock has reacted positively to their earnings and guidance. Realistic view going forward. There's still potential for more upside if they continue hitting these high growth numbers and if AI demand stays extremely strong. However, a massive explosion in the stock price from current levels is less likely because the market has already priced in a lot of the good news. The stock currently trades around $112 to $114, with a market cap of about $33 to $34 billion. Would you like me to tell you what would need to happen for the stock to have another big leg up from here?
Yes.
Here's what would need to happen for Iron Mountain to have another big leg up. For the stock to really explode from current levels, around $112 to $114, these things would likely need to occur. 1. Major acceleration in data center revenue. They'd need to consistently beat expectations with 30% plus growth every quarter, not just 25%. 2. Significant new big contracts. Landing a major hyperscaler as a new large customer beyond their current ones would be a big catalyst. 3. Better profit margins. Cash data business currently has lower margins than Equinix. If they can show that margins are expanding quickly, the market would reward that heavily. 4. Clear path to $2 billion plus billion. If they can show a realistic path to $2 billion in data center revenue within 2-3 years, they're at according an $800 million now. That would be a major re-rating catalyst. 5. Multiple expansion. The stock would need to trade at a higher multiple, price to earnings or EV/EBITDA, as investors become more confident in the data center story. Honest take. The easy money on the data center pivot has likely already been made. Future big gains will require them to consistently outperform on growth and margins. Would you like me to compare how much room each of the three, IRM, DLR, EQIX, has left to run?
So by the way, like one thing is probably kind of mentioned there in that the catalyst, but like if they come in with revenue numbers that are gonna come like they already said over $1 billion, but like if they come in like 1.5 billion, something like that could be like a major catalyst where you could see a 50% run. I mean 30% run. I mean at least it'd be easy for them to get like a 20% run if they hit like 1.5 billion because going from 800 million to 1 billion as they're projected. First of all, it's just projected. It's not confirmed. So once they hit confirmed, there'll actually be a shift there. They might gain like 5% just in the confirmation of them actually hitting the numbers that they said they were going to hit. But like if they said over $1 billion, but they hit like 1.5 billion, you did 800 million in revenue the year before, and then now you do like 1.5 billion. That's almost a 2x in revenue. So like with that being said, this stock could turn into like a $200 stock pretty much overnight. So yeah, that's where I'm looking for like some of these opportunities and where you're digging and you have to look and see like has the market recognized it yet? And it's mentioned that it already has recognized a run up. But like if this company just recently shifted over to data centers, then there could still be a run up for years and years to come. And that's not to say that there's not going to be good consistent growth for years to come as well. Like this company might have good consistent growth for the next 20 years, but it may not be the growth like that I'm looking for, where I want to see like 2x returns on my investments. I was going to ask, how long has Iron Mountain been doing data centers?
Iron Mountain has been in the data center business for about 13 years. They officially established their data centers division in 2013. That's when they made the strategic decision to get into the space. Their big move came in 2017 when they acquired IO Data Centers for $1.3 billion, which really expanded their footprint. So while they've had the division since 2013, the aggressive push into data centers, especially the AI-focused growth we're seeing now, has really only been the last 4 to 5 years. They're still relatively new to this game compared to Equinix and Digital Realty, which have been doing it for much longer. Want me to compare how long each of the three has been in data centers?
How long has IO Data Centers been building data centers?
IO Data Centers was founded in 2007. That means they've been building data centers for about 19 years now, as of 2026. They started in Phoenix, Arizona, and became known for their modular data center design and building very large facilities. Their biggest claim to fame was building what was at the time one of the world's largest data centers in Phoenix. Iron Mountain bought IO's U.S. operations in late 2017, so Iron Mountain has only had these assets for roughly 8 years. Would you like me to compare how long Equinix and Digital Realty have been in the data center business?
Can you give me like the data center growth for like the past 5 years each year?
Here's the best data I can give you on Iron Mountain's data center growth over the past 5 years. Global data center revenue 2021, $620 million. 2022, approximately $650 million, approximately 5% growth. 2023, $686 million, approximately 5 to 6% growth. 2024, $737 million, approximately 7 to 8% growth. 2025, $803 million, approximately 7 to 8% growth. The real acceleration started in 2025, with Q4 2025 showing 39% year-over-year growth in the data center business. They've also guided that data center revenue should exceed $1 billion in 2026. That would represent roughly 25% plus growth for the year. Would you like me to also show you the growth rate for their overall company revenue during those same years for comparison?
Stuff like that is what I'm looking for. So I don't know if you caught that or not, but basically, we essentially had 5% growth, 5 to 6% growth, 7 to 8% growth, and then they had, you know, was 39% growth, which means they just figured out something. They either just scaled something or just figured out something in the sense of like a new business development. So like it's likely that they can start hitting like these 39%. Now there's a possibility it could be a one-off, like they just launched, maybe they just signed a new contract or something like that, but that's a pretty big jump. That's generally if they're leasing a building, they're not leasing just one building. And it could be depending on the size of the data centers for like 1 year. That's to me that looks like they've made a shift in their business, and maybe that's what we'll dig into next. I'm gonna have it give me those numbers, the growth numbers, and then I'm also gonna have it. I'm gonna ask it what the pivot was on why it grew that much. Yeah, go ahead and show the overall growth rate. And then I'm also really curious on why they had such a large revenue growth in the data centers this past quarter.
Here's the comparison. Revenue growth past 5 years, data center revenue. 2021, about 620 Inges dollars. 2022, about 650 Inges dollars, plus 5%. 2023, about 686 Inges dollars, plus 6%. 2024, about 737 inches, plus 9%. Q4 2025 jumped 39% year over year. Overall company revenue, 2021, about $4.2 billion. 2022, about $5.35 billion, plus 27%. 2023, about $5.64 billion, plus 5%. 2024, about $5.84 billion, plus 4%. 2025, about $6.1 billion, plus 4 to 5%. Why Q4 2025 had a 39% jump in data center revenue. This was mainly driven by two major factors. 1. Large new leases coming online. Several large hyperscaler contracts that were signed earlier finally started generating revenue. 2. New high-density AI-ready capacity. They brought online new capacity specifically designed for AI workloads. much higher power density, which commands significantly higher rents per square foot. The market reacted very positively to this, which is why the stock has had such a strong run this year. Would you like me to summarize all of this into a clean section for your investment thesis?
I don't necessarily like this company just because the growth numbers are not there, but I do think this company is like at a pivotal moment. Like if you were already investing in this company or you're thinking to invest in this company, like now seems like a good time to invest in this company. It seems like they've kind of figured something out. I don't like their year over year revenue growth. I think it's trash, but I do like the data center growth. I mean, for the data center growth, if I was talking about that, I would invest. But their revenue growths have just not been good. I mean, they only had one jump in total revenue growth back in 2022 of 27%. Everything else has been like basically 5%. Now, the one thing that's probably happening there, they're probably shutting down all of their paper storage business or whatever it is and converting everything over to AI data centers. The other thing that's there too is electrical upgrades. So, like, even if they have these warehouses, it's highly plausible, unless it was already like a manufacturing facility before then, that they still need to add more power to it. So, like, say for instance, they might have like they may have like oh shit, what was I gonna say? I don't know how many amps traditionally these facilities are. I don't deal with that very much, but like maybe it's it has like 1,000 amp service or something like that, or 10,000 amp service. It has a 10,000 amp service on the building, and to run an AI data center in it, they really need like 20,000 amp service. So like basically they need to run new lines all the way from like the power grid over to their building. Now it might be a plausibility that there's already a substation nearby or something, which this could be one of their advantages, where maybe they already have like substations nearby, and they're able to pull from that substation pretty easily. So like the upgrade and getting them higher amperage system may not be that big of a deal because there's already capacity on those lines. But that's hard to say without like really digging deep into this company and really understanding that. Now I do think that if I sat here for 4, 5, 6 hours, and maybe I would before I put money into this company, I'd probably sit and I'd dig for a lot of hours before before I really put any significant amount of money into it. Now I'd maybe buy a share or something like that, just kind of keep my mind wrapped around it. But yeah, not something that I would necessarily want to do. Let's go ahead and kind of wrap this one up a little bit. Let's go ahead and go over the other two companies real quick.
Here's a quick, clean breakdown of the other two companies. Equinix, EQEX, the highest quality data center company in the world. Their facilities are considered premium. They're the Tiffany's of data centers. Growth has been steady but slower than the other two. In 2025, their overall revenue grew around 5 to 6%. They have the strongest balance sheet and best reputation with big hyperscalers. Most expensive valuation. You pay a premium for the quality and stability. Digital Realty DLR. Second largest data center owner after Equinix. More aggressive than Equinix on AI deals. Showed stronger growth than Equinix in 2025. Revenue grew around 10%. Good middle ground option. Better growth than Equinix, but not as risky as Iron Mountain. Valuation sits between the other two. Quick summary ranking. Fastest data center growth, Iron Mountain, by a wide margin. Best quality and stability, Equinix. Best balance, Digital Realty. Would you like me to go deeper into any of these three, or are you ready to start scoring them now?
Yeah, just go ahead and give me a score.
Here's a direct scoring for the AI data center operators sector. AI data center operators scoring out of 50. 1. Current AI data center exposure, Iron.
Yeah, I don't want to listen to it. It's gonna give me all these ones. I'm not super interested in this. I'm actually probably gonna end this video here soon because I'm not gonna dive deeper into this, and I really don't want to explain a lot. But the thing is with it is I just don't like their numbers. Their numbers are not great. I'm gonna go ahead and copy this and paste this information into my spreadsheet or my doc or whatever, just so I have it. But again, I'm just not super interested in this. The growth numbers are not there for me. Now I do like the fact that this one company has the data center revenue growth by as much as they do. I think there's some potential there, and that's something worth keeping an eye on. But overall, these are like property investment type of returns, which is not what I'm really looking for. So my next video is probably going to be on like GPUs or something like that. We'll see. But yeah, if you want to subscribe, so that way you can see these other videos or go back and watch the other video if you haven't already. But yeah, I'm just keep doing a breakdown of this. These are gonna be kind of long, kind of boring, but there's something you can listen to and kind of get a breakdown of like some of the questions and things that I'm doing, like so that way you don't have to sit here and do it yourself, and you can maybe start seeing what I'm doing and how I'm doing it, and then you can even do it yourself for any particular like strategies and stuff like that you may want to do. Now, this video would probably be better if I did screen shares and all that stuff, but I'm just not doing all that. It's too much setup time and all that good stuff. And I'm really just doing this. Like, I was doing this today, and I just thought I would record while I was doing it. So, yeah, hopefully you enjoyed it and it was valuable to you, and I'll catch you in the next one.